Hello, fellow investors. Welcome to NordicFinans with me, Lucas.
And me, Markus.
And today we're doing something a little bit different than usual. What are we going to do today, Markus?
We are going to look through some financial statement analysis, a very sexy word indeed.
Yeah, sounds
But
boring.
yeah, it sounds kind of boring, but it's actually, if you want to take not just like bet on the stock market, you and actually base some of your investments upon, well, actually what the company itself thinks it might be doing and actual reports and stuff. I think it's better to do some sort of at least basic financial statement analysis to see some key figures and ratios and stuff like that. And we should probably kick this little investigation off with saying that all of these analysis, all these reports, statements, everything, they are almost always readily available on the internet on the company's homepage.
Yeah, and I
So
think,
everybody,
yes, and I think we should also emphasize by saying that we're relatively new to doing this. Markus just taught me how to actually do this since he is the one with the education, but how this
yeah,
is
but I am also really new with this. I know a few few basic things to look for, what certainly to try to avoid, a few key figures, but I definitely don't know nearly everything. I'm trying to figure things out as we go, as I go, but I can definitely share what I've found so far, and I do think that it's gonna help you.
Yeah, and so that's a little bit of a disclaimer, but I think we can also use that as an advantage because that made me realize that I could really press him to say that what's the most important thing to look at, or if you can only look at one thing, what are you going to look at first, and then what are you going to move on to? So you get, like, if you want to do a brief technical and or not a technical but fundamental analysis, what do you want to look at least, like the bare minimum?
Yeah, and that's what we're going to do today and see through a few key things. But we should also caveat this by saying that we might definitely do a video in the future that completely changes everything this video says or adds. Most likely, we're mostly going to add to it
Yeah.
and say other things that you should probably check for, because I think these are so basic that they are like there. These you need to have figured out. But in the future, we might add a few also. So this list is definitely not complete.
Yeah. So since fundamental or what was it, financial statement analysis sounds boring, I decided to call this reading for gold or sorting through the shit looking for the pearls. So that's what we're gonna do. And Marcus has actually found us a great company, or at least we looked through it and it looked pretty good to us based on what we can
Yeah,
say.
I think it's a good example. It's really basic, and this is the half-year report, so it's quite short, and it works as a great example for us, I think, and for our purposes to do a brief presentation of some financial statement analysis.
Yeah, and you can see the name here. It's called Tecnotree. Okay, so to start off, uh, we thought it would be a good idea to get a general sense of what the company does, right, Marcus?
Yeah, yeah, I think that's probably actually you should have done this already before you even decided to. You should have do what Lucas is doing right now, Googling the company, check its homepage. What is it? Its sources of revenue. What is it business? What does it actually do? Who is its customers? Perhaps even who is its investors already? All these kinds of very basic things, but also keep up with the company, of course. Like, uh, what is it investing into? Is it trying to get into another business? Has it done any like big well, there you can actually see the partners of this company, which is quite interesting. But all these sorts of things, you just need to have a really good overview of what the company actually does and what is its future like look like. And all of these things, if you go back to, or even, I think you have the financial statement open somewhere here.
Yeah, I do. Just a second. Yeah, here.
Yeah. So if you just scroll through the financial state half year report here, you can just scroll. Scroll. You can just see that there's a lot of text here, not only numbers, but also text. And the text is actually pretty important too, because it's descriptive of what the company is doing, where is its business, like what is it selling, where is it getting its revenue, and all of these stuff me and Lucas grouped into the category of overview, like just a general overview of what the company actually does, some basic information, all this kinds of stuff, because you really need this, because without this overview you really have no idea what you're even getting into without the numbers, and that's never a good idea. You should always know what you're investing into, is what I'm trying to say with this point. Was it any other part of that point?
No, I think that's a really good. I think that's a really good summary of this first point. And so, in the case of this company, Tecnotree provides digital service and digital solutions for companies who want to basically to other digital companies or who want to provide digital services, and they really do the whole package. Like,
Yeah, but it's important to mention that it's in business management, almost. I cannot say exclusively, but mostly. At least that's what
yeah,
you find
mostly
through
business
the.
management. Yeah, correct. So just that you have a general sense, and we will dive into more of that later. It's not really important, but just so you understand what we're talking about, it's good to also understand what
Yeah,
the company does.
for the overview, for that matter, is that Tecnotree is a Finnish company, but it purchased an Indian company actually in 2008, and now it's kind of a split. Like most of the personnel is actually operating in India, and you can also find out where its markets are, which is primarily right now in the Middle East, Asia Pacific, and Central Asia. But yeah, that's like overview stuff. You can also find out that they're like a full stack developer of the business management solutions, stuff like that, which is really good. But I think we can move on probably to the next
Yeah.
one.
Before we do that, can I just ask you? So, how do you first of all find a report like this? What did you Google to find this? Because you just sent this to me.
Okay. Yeah, that's pretty important.
Mm-hmm.
I did mention that all of these are free, for that matter. You don't have to pay to get any of these. Companies vary on what they actually provide you with. As you see, this is a half-year report. I think they are fairly common half-year report, but what you most often find almost always is quarterly reports and annual reports. Annual reports is by far the most common one. It comes out once a year, depending on when the company does the annual report, and these are generally used for financial statement analysis, but also the quarterly reports. You can find all of these, and you can use whichever you think is most relevant to you. Usually, the annual statements is really good place to start. This is actually a half-year report, like I said, so we could have looked at the annual report, but for this particular company, I think the half-year report is better. Also for us because it's short and it's easy to make examples out of, so that's why we picked this one.
Yep.
But you can find all of this information usually through the company's homepage. So you go to, for in this instance, the Tecnotree. You can search that into your, put that into your Google search bar. Then you will find the company homepage, well, right there. And then they usually have something called investors, which I'm sure you have seen on company homepages sometimes. They say for investors,
And
investors.
here, financial reports.
And there's usually a lot different buttons that you can click through, and here you have
Oh, here's actually Q1 as well.
there is, but we use the half year one, and then you also here have the 2019 annual and Q4 report. So yeah, there you can find whatever you're looking for. You can see that it goes quite a long way back also. So yeah,
Very,
that's where
very
you find
cool. Okay, good, perfect.
and almost all companies operate this way. So it's generally on the investor tab, and you can find it through financial statements or other news which you're interested in.
Okay. So now
All
let's
right.
move on. So the first thing that you suggested one can look at, because it's easy to find, is the PE ratio, which of course is price to earnings ratio, and as well as the total revenue.
Mm-hmm. Or the market capitalization.
Oh, sorry, the market cap. But doesn't
Yeah, the reason why I put these in is that they are not like that. You shouldn't base your investment decision only on these two numbers, but they're a really good place to start. First of all, because they are usually Google searchable, so you can just search Tecnotree PE ratio. We actually had some issues with this particular company with the PE ratio because the first alternative was probably not accurate. So always check if the statements are or if the ratios are accurate, because usually some type of analyst forms do them, but they are not always credible. So check who has done it, and also you can obviously calculate itself through doing the price to earnings ratio.
Yes, you
But
usually can find it really easily. And when you've opened the report, as you can see, I just pressed Control F and P/E price to earnings. And you told me earlier, what's like a good range? Where do you want this to be in general?
according to the sources I've found, is that a bit under 20 is generally considered quite good. And as you can see, this one is 13.6, and this was actually in June, so it might have become something else to this point. But 13.6 is quite fine, I'd say. Then to continue, we also have the market capitalization, and that's basically all the value of all shares put together. And well, that's not too hard to calculate yourself. You just take the share price times all the outstanding shares, and there you can see that it's 64, almost 65 million, and that was increased by 22.7 million compared to the end of 2019. Now, in this particular company, like Lucas said, there has been significant price increase in the stock lately, and that's probably accounting for most of this increase. That the share price has increased, so therefore the market capitalization has also increased. So it's not actually that they have bought a lot of assets or something like that, which is what it is, I guess. I'd say it's probably pretty good for me as an investor that invested early, but it might not be so good for you if you are an investor that is thinking about investing, because then you might be thinking, oh, but the share has already increased quite a lot. Maybe it's not the right time to enter now. It's too late, But it is what it is. But also what you can, the market capitalization also tells a very important thing when you consider, for instance, that this is only a 65 million market cap company. It means that it's minuscule, but it's operating in Finland, and we generally don't have a lot of big companies here. But when you put it on a European or certainly an American stage, this company is very, very small. But I mean, that might be a good or bad thing, depending on what you want. Of course, here the stock price had increased quite a lot. Maybe that's because it's a small company, or I don't know. It's just up to you what you think as an investor. But it's important to know that this is a small company.
Yeah.
So you get this information by this market capitalization. You can see that this is quite.
Can
small
you
company.
quickly run? So this is the market capitalization, and what would be a big company? What would be a large cap company?
Well, I mean, you can take the obvious one, Apple, with over $1 trillion in.
Yeah, but what would be like? What I'm thinking the thresholds now in terms of money, because we're looking at the numbers. So 64.8 million, you say small.
Give a specific number. It varies very much between countries, even, or markets. So in Finland, I would say that this is actually not a minuscule and not even a small company. It's at least a medium-sized, probably even big, but it's not a big one on a European stage.
Okay.
It's so that differs between countries, but it's important to know that I would say always go from the American markets and go look from there. So that in this case, it's a really small company. At least if you are trying to invest internationally. Of course, if you're only specifically investing, for instance, in Finland, then you could look more what is a big company in Finland, for instance. But this varies so much, like the market cap, what you should deem it on.
Okay, so next we've written EBIT.
Yeah, I think that always you might want to give it a brief glance at least, or check it. Well, probably more than a glance, actually. It's pretty important because it's what the company is actually making through their operations, so to speak. How much money are they generating through what they are doing, before interest that they are paying for the loans and before taxes that they eventually have to pay if they are making money. So I think that this should generally be positive, I think, unless you want to buy the shares in a in a downturn or something and get a discount. But in general, I would definitely look at the EBIT and try to see. You probably want it positive.
So tell us, what does the EBIT stands for? You kind of said it,
Yeah, I
but
lost. It's earnings before tax, before interest and tax.
Yeah.
But I would just check to see EBITDA, EBIT, and see if it's positive and what it's currently at. Because right here you can see that it's quite high for a company of this size. I mean, they had a market cap of 65 million, and their EBIT is 6 million, which is a tenth of their market cap, which is substantial, I'd say.
you wanted me to write down debt ratios.
Yeah. I'd say that these, for me right now, as I'm still beginning my financial statement analysis journey. Wow, really corny. But I'd say that this is probably one of the things I put quite a lot of emphasis on. How much in debt is the company, and why is it in debt? And how much of this, how much interest do they have to pay for each period? And can they cover these interest payments? So basically what this tells us is that, I mean, I think this is pretty telling, honestly, that you just want to make sure that the company is not in a massive amount of debt, for instance, because how will they cover that in that case? And also, not only that, but loans and debt in general carry interest. So you want to make sure that at least this company can pay off its interest and not be able to even cover those, because that's a really bad sign in general. And I think that's pretty self-evident. A lot of the cases, though, if you can't cover your interest rates, you're definitely going to go bankrupt quite soon.
Yeah.
So these are the things that you really want to have a check. And I don't think we actually have to spend too much time explaining why you want to check the debt ratios, because they are quite important, just to know that the company is not doing horribly when it comes to its financial situation, where it has a massive amount of debt and it can't cover its interest. Make sure that these things are quite in order. And here you can also look at the overview, because the company can carry debt. That's not necessary. It should probably carry some debt, because it means that it's doing some activities. It's maybe doing some investments of its own, buying smaller companies, something like that, making itself more profitable. But it comes to a point where it has too much debt and it just can't support itself under this massive debt burden anymore. And that's what you should check for. If it has some crazy amount of debt that you can't really explain, I would move on to another company.
Yeah. So tell us how, maybe not why, but how would you check for this? Did I do this correctly, that I search for debt? This is the interest-bearing liabilities. Am I on the right page now?
It usually comes in a lot of places, because you can actually see here, you're actually at restructuring debts, which is for this particular company is quite interesting. But I would type in liabilities instead. You generally get better. Yeah, here you can see interest-bearing liabilities were 13.7 million. If you compare that to the market cap, it's not terribly high, for instance. But I would go down a few. If you can hit the arrows so it finds the next one. So here you can actually find the non-current liabilities, and these are like the total amount of liabilities that it has, like the current and non-current. I'm not going to go into the actual details of what this means. There is some differences between these, but what you generally want to know is, like, with the liabilities, you should check them towards maybe market cap, toward revenue, toward total assets, or something like that, and see in general how high is this amount of liabilities. And I mean, if we don't want to explain it any further, we could dedicate a whole episode just to liabilities, because there's a lot to talk about if you want to go into detail. But if you just want to glance over it, so I would probably say check the non-current liabilities there. You can see sort of a total. You can also check it to, in this case, and generally you can do it, you can check it to the year before that. So in this case, we can see that in 2019, the same period, it was 13.8, and now it's 12.9, which means that they are paying off their debts. That's quite good. That's a good sign, I would say. Like, in personal finance also, it's good that you're paying off your debts and not getting more debts.
Yeah.
And then when you look at the current liabilities, it's a lesser part, because the non-current is long-term, current liabilities is short-term. That is the short explanation of that. But if you add those two, you get total liabilities, and these are like the debt the company is currently holding. So you just want to make sure that this amount is not at a level where you would not personally accept this. And this, I think you would have to gauge yourself. What do you want to compare it to? Maybe look at the overview. Has the company made any investments that are quite big but might be very profitable? Then it might be okay. But in case that the company has made investments that might not be very profitable, then you probably should avoid this company. I think look for things like that. I can't give like a simple answer that if liabilities are at this level, don't invest. It all depends on what the company is doing and what you're comfortable with yourself.
Yeah, okay. I think that's good. And then we have the revenue / the results.
Okay, so I don't think we have to spend too much time on these either, because they're also a little bit perhaps self-evident, that you want to look at how much money has the company made, probably also where this money is coming from, what type of segments or operation the revenues are coming from. You want to check the result for the period. Companies differ what they call this, but it's basically what they have earned, what they are potentially going to give out to shareholders, for instance. This is what could then go towards dividends, for instance, or investments for the company. I think in this particular case, since it's quite a small tech company, they're not going to pay out any dividends. They're actually going to reinvest this money that the company basically have earned after all taxes are paid, after all interests are paid, stuff like that. So this is also one thing you definitely want to look at, like the result for the period. It should probably be one of the things that you look for first when you're searching, just to make sure that maybe this is positive, for instance. It doesn't have to be, of course, depending on when you are investing. These things always differs. For instance, if you want to buy low, then you don't necessarily want it to be high. But yeah, otherwise you want the result for the period. You'd always want to check it so you can see where the company is at. Are they doing well? I think this company is right now, because they are if they had a market cap of 65 million and the result for this period is almost, well, it's almost 4 if you round it down. That's quite a lot, like percentual wise, of the whole market cap of the company. So it's quite high. It can say that this is a company that is doing quite well. But if the result for the period, for instance, was 0.2, then you can see that the company has not done so well and is probably having some problems or have done some large investments that is currently dragging them down, but could be something in the future. But these things you want to be aware of. But like we said earlier, I think a lot of these goes back to the overview when you look at why the result might be what it is or why the revenues might be what it is. So always check these in tandem with the overview and the text.
Yeah.
But I think that's it for the result for the period. Always check this number just to know where the company is at now, and possibly also when it was a year ago, which they usually provide right next to it.
Yeah. I feel like I'm back in high school giving a presentation and I'm the one who didn't do any work. You're just like soloing this, but you're doing really well. Yeah, I think this is really good.
It's like I'm running out of things to say, but
yeah, let's move on. So that was revenues and results, and
Yeah,
as usual, it's the general trends that you wanna take a look at. I've seen a lot of people who do this, that they have like their own sort of checklist similar to this, their own sort of checklist, and then for each one they basically have like a little bear or bull or just neutral, and then they check out at the end like the sum total, if they're like super bearish or super bullish, and in that way they compare. So it's more like of a semi-quantitative kind of science than a total qualitative, meaning more the like yes or no answers compared to just numbers. Or that's the feeling I've gotten from it, at least. What would you say to that?
I think that's actually really good, and it's really good for like this whole what we have talked about all through this video, is that you can't check hard numbers exactly. Like, of course you can, because you can look at the financial statement, but you can only say, is this good, is this bad for me in my particular situation? So yes and no answers, like you just said.
Yeah.
And these you can yourself, because they can only tell you so much, but they can't tell you what to do.
Okay, so finally we had the key figures, and you said not all reports might have this section, but it was really helpful in this one because it's basically a summary of everything we've covered so far, but in one place, right?
Yeah, and a few others that we haven't even looked at, like ROI and ROA, return on investment, sorry, a return on assets and things like that. And this is not indicative of how it is always, because this return on investment is quite high along with the equity.
Yeah, this is insane.
But yeah, it's really good if they provide something like that. This is one of the other things that I would just say, give this a glance. Key figures, look at it. What do you think? Bearable, stuff like that. I don't think they are quite quantitative, so you can't, they are what they are. So then you have to make your own assessment based on what you see. So that's why I would definitely say that you should check this, see what you think, and do some considerations based on that. Okay. But I think that's it. Like, that's a few basics. Overview, the PE ratio, market cap, debt ratios, look at the liabilities, also in tandem with the overview again, look at the EPS, the earnings per share, along with the PE ratio and market cap that we already mentioned. Look at the revenues and the results, again with tandem with the overview. Why is this happening? Is there explanations? And finally, if the company provides any key figures, always give this a glance. I mean, they're always worth checking out. So look at them and, yeah, make your assumptions and make your investment if you think it's a good fit for you.
I think this is actually a great place to start, and I wouldn't be surprised if someone who's more experienced than us would agree that it's quite a good start.
Yeah, they might add something. They might probably not subtract anything, because I think we have all these things at least.
Yeah.
But we could add that in the future. I mean, there's always room for growth.
And this is something like once you get good at this is why I really wanted to do this video, because I really wanted like a process for this, because there's so many different companies out there, and if you don't know at all what to look for, it's impossible to make an informed decision what to buy. So that's why I really wanted something that you could somewhere to start, like that, first I need to get myself the latest annual report, then I need to find these key things and check what's the feeling I'm getting from these key things, and then make a decision after that. That's what I wanted from this video, and I think that's what we provided, so I'm really happy with that.
I think we have, to summarize this video, I think that we have provided you 6 basic things to make an informed decision as a beginning investor.
Yeah, perfect.
I think that's what we've done here, so I hope you liked it.
Yeah, and with that, I would like to know if there's any small companies or other companies that you're looking into, or maybe you want us to look into. And as always, happy investing.
Happy investing, guys.